All right, so you can see here, this is a level of support, right? And once
Yeah.
price break that, that's considered a break of structure. All right, so because you broke a level of support, all right, and it's a firm level. Once you broke that here, that's a sign that price is likely to continue in this direction. But after a break of that, if I didn't catch this break, I would be looking for opportunity on the retest. Just looking at this on a weekly, I mean, from a swing trade perspective, let's say price came up here. Let's say you entered here on a smaller time frame for the sell retest. But you could see here on the weekly, this is the weekly chart, it formed a bearish engulfing right here on the weekly. So if I'm seeing that on a weekly, I'm understanding that it's likely going to give, an even bigger move to the downside, because that bearish engulfing, remember, it's a sign that the sellers are in control. I'm sorry, say that again.
No, that was my notifications.
Oh, okay. Oh, it's all good. But yeah, it's a sign that the sellers are in control. So the higher the time frame I see this on, the stronger it is. But also the fact that you see this type of candlestick action at a retest of structure. So it retested and found strong resistance. You can see after that, it formed a lower low within price.
Okay.
Right. So, but let's say if you're going on if we look at it on a smaller time frame, we just see how you can look to enter this type of scenario. All right. So this is where we are on the daily. All right. So on the daily, we can see, looking to the left, we still can identify that this is a support structure. You see, price bounced, came back, found support again until it finally just broke through right there. All right. Now, by me judging based off of that price action, if I didn't catch this down move, I'm looking for the next corrective play. So I look for this to correct. Look for this to correct. A lot of times when I'm trading, when I'm looking for the corrective move, like understanding, looking at this here on the daily, I can see this is a downtrend. You can see this is my high. This is my lower high. This is a low, lower high, lower low. On this retest was basically a lower high, and it continued. You see that? So when I'm trading in line with structure, I'm saying, okay, we got to break a structure. Now I want to look for price correct. Normally, I want to see price reach an area of value or area of structure that I can say, okay, I'm looking to trade, catch that continuation from there. So now we here on the daily, and you can see what price just did here on the daily. It printed this bearish engulfing right here.
So the bearish, and even when it's bullish engulfing, it just means that it kind of basically consumed the previous wick or time frame.
Right. Well, it basically engulfed the previous candle. So
Got you.
see how this bearish candle is pretty much engulfing that candle, including the
Yeah.
wick, but the candle in general. The bigger it is, the better. But you can see that it engulfed that. And this is a daily candle, so that means it engulfed the previous day. You know what I mean? Which is a good sign. So you factor in your different forms of confirmation. You see, we're in the downtrend here on the daily. We got a break of structure. Now price is retesting at this area of structure, and it's forming resistance because it's rejecting. So now on the daily, we got the bearish engulfing. All right, so that's another form of confirmation. We got a breakdown, a break of this counter trend line. So I've now formed multiple forms of confluence to say, you know what, I like to trade, I like to sell, basically based off of all the different things that's adding up. I'm looking for sell here, and you can see it broke down, pulled back. So if you miss the initial breakdown, that doesn't mean that you won't get another opportunity. And I'm gonna show you how you can still caught this. But just looking at this on a daily, if you're a swing trader, if you a swing trader, you will have no problem catching this on a daily. Let's say, for example, because a lot of people, some people, they want to, like, they're so focused on just having, of course, if you have a tight stop, that's cool. But if the risk reward is still there, let's say, okay, you see this printed on a daily, and you say, okay, on a slight pullback, it didn't pull back much after that. So let's say you entered around here, and you had your stop loss above the bearish engulfing. At the bare minimum, I will expect this to come back down to this low that it made. And you can see it surpassed that. So even if you enter here based off the daily, yeah, your stop loss probably would have been a little higher. Like right here, this is 200 pips. If you entered right there and had your stop above the daily, but you would have been able to catch over 1,000 pips. See what I'm saying? So that was or 1 to 5 or more risk to reward. So it's not so much about how big or how small the stop loss is. It's more so about is the risk to reward there. You see what I'm saying? So understanding that this was a daily setup, price just continued and broke, right? So we had a nice breaker structure and a nice breakdown. All right, so let's look at this on a 4-hour real quick. If you got any questions, stop me at any time.
Got you.
All right, so you can see I can adjust this counter trend line real quick. All right, so now you can see how it looks on the 4-hour. So we got the breakdown. I will also, if you probably seen my trend line strategy videos in the back office.
Mm-hmm.
So basically going in line with that. I could throw my moving averages on. You could see if you could see it, the red is pretty much crossing over right here.
Yeah.
And I say when it's crossing over, like at the same time as a breakout, slightly before, that's added confluence. So boom, right here, this was a break. This was the confirmed breaker structure as well. We broke that trend line, and it slightly pulled back. So really, that's another. You could have been looking for entries around here. Around here, you could have had your stop loss above the high as well, and you could have still rolled this down right there, just right there. That's about 900 pips right there. All right, and this happened in, this was just so you can get an idea. This is gold, so gold moves with more volume than like Forex currency pairs. So this was Wednesday, and it gave you that 900 pips by Thursday. This was, let me see, wait, that was the 17th, and this is okay. So it took about 2 weeks. So if you were swinging this for 2 weeks, you would have got almost 1,000 pips. All right, or if you just caught this initial drop right here. By Monday, you would have made, let's say right here, by Monday, you would have made over 500 pips entering a trade on Wednesday. So that basically that's like a 3-day move, 3 to 4 day move. All right. So just understanding that, but then now when it comes to structure, you want to pay attention to these things, just knowing how to identify, your next potential opportunities. So I could look at this as well, and I could see, okay, we got a breakdown here, slight pullback. Because a lot of times, like when you're trading in line with structure, you're going to see price come back and retest previous structure low. So like in this scenario, this was a breakdown here, breaker structure. Then we had a slight pullback right here. On this pullback, it retested previous structure low here. You see that? So this was another opportunity here. You see, and that also gave opportunity. And then it continued to fall, forming a lower low. After that, we had another correction, a slight corrective move here. Right. And then you see, boom, we getting a breakdown there. So you can look to trade in line with these breakdowns, with this structure, and just ride these down. All right. And then it dropped, continued, slight pullback, and it just continued. All right. This was another opportunity right here. If you look at this, basically came back. And it's about training your eye to be able to get familiar with seeing these moves. So if you look at this, price broke structure here, right here, forming a lower low, right? It broke below this previous low, okay? Broke below that. After that, it came back, retested around here. Then you see, boom, we had a nice engulfing rejection from that. And then from there, that was a sign of price continuing to the downside. All right, now you could have entered there too. Could have had your stop loss above there, and you could see after that price dropped, well over 800, dropped about 900 pips after that. All right, after that, it had a bigger pullback, and when it pulled back, it came and came to this exact same level. Look to the left. That's why you always go look to the left to go right, because now. This is on a 4-hour, but this will still be considered a level of supply, because this is the previous level that it had that drop, 900 pip, about 900 pip drop, or actually from here, not 900 pips. From here, it's about, let's see this range. Oh yeah, from there, that's 1,000 pips, 1,100, almost 1,200 pips. So that's a nice range on a 4-hour. And when you're dealing with gold, the ranges are much bigger. So now it came to this level, initially rejected. So this is Tuesday or Wednesday right here, this candlestick, Wednesday the 5th, broke down, came back and retested this on the next day, which is Thursday. So a lot of times you're going to see price come back and retest the previous day high, fail to break above it. So in this scenario, it formed what you call it forms a double top pretty much. Because in this scenario, then we got a bearish engulfing, right? You could have entered after that. You could have either entered after that, or, you could have waited for a slight pullback because this is the 4-hour candle. So understanding that, but seeing this type of candlestick pattern, rejection after retest of that high is a good sign. It slightly pulled back after that. So you could have waited for a pullback. A lot of times after a 4-hour candle, you'll get some type of pullback, let it pull back some, and then you can enter stop loss above that. Right. And then you can see after that price continue down just right there. That's 700 something pips. So if you entered there, I mean, that's a 1 to 8 risk to reward. And this is how you get familiar. And you could have expected it to at least come back down to this low, like roughly around this low, you could see. So around this low, look to take profit. You see that's what it did pretty much. It hit that low, that same level of support, and then it bounced. See, basically it came to this level of demand and bounced up. But before that, it dropped 1,000 pips from up there. This making sense?
Yeah, it's making sense.
All right, cool. Let me see. Yeah, so that's really the gist of how you look at structure. We could look at other examples. Going into this week, I'm looking at potential sales on gold based off of where price is at now. If we look at this on a daily, clear some of this up. This is a big week. It's a lot of fundamentals this week. You got FOMC, which is the interest rates coming in for the dollar. You got, I think, CPI, like a lot of news this week. It's a news heavy week, and it's right before, the Christmas holidays. So they probably going to move the market. But now looking at this, we're at a level of structure. We're at this same level. I showed you this whole breakdown and how you could have caught this sell. Now we're right back at this same level again. So we could potentially be setting up for more sales, similar to how it happened in the past. So we come down to this level. And remember, before this move happened, we saw a bearish engulfing on the daily. So I'm interested to see how this daily candle close. Now, tomorrow. Now, the way that it's setting up now, I'm leaning towards potential sales, but how does daily candle close tomorrow will give me even stronger confirmation and confluence for what we're likely to do. Initially coming back into this level of structure, we had a rejection. Now we're retesting this high. So if we hold here and we form nice bearish price action here on the daily, I would like to look for, I would look to continue to look for potential sell opportunities. So far it is setting up for that. We can see here on the 4-hour, we're getting nice rejection here on the 4-hour. All right. So I'm interested to see how it's about to play. So with this, I can also take like a counter trend line, right here, and if price, take that. All right. So if price comes down and it gives like a sharp sell-off, like it's starting to give some type of rejection now. If this continues and breaks down, then I will be looking for the pullback opportunities. All right. Or if it comes down here and breaks below this level of structure, that's even a more firm break. All right. Because that would be like a higher low within this structure. So if it comes down and breaks through there, that's even better. You can look for your opportunities. So we just gotta basically react. You don't want to get too caught in predicting price. I mean, you can get an idea and project what price is likely to do based off where it's at. But once price really shows its hand based off of these levels of structure, then that'll give you even stronger indication of what price is likely to do. So right now, price is setting up. So going into New York session, going into how the daily candle closed, that would be more.
Basically, that would be what end of day tomorrow to see how it closes.
Exactly. That's why a lot of times, part of my trading plan is waiting for the daily candle to close on Monday, because how I trade, I like to catch those daily swings and, swing the market. So normally based off of the Monday daily close, it'll give me more of an indication what price is likely to do. All right. Because now, sometimes I do catch, jump in early, like kind of what it's doing now, just with anticipation. But just to be safe and have more confluence, you will wait for them to firmly show their hand you know, and then just trade in line with that. Right. Let's see. Let's look at you.
Is there a preference that you use for some of these? Like I know a lot of these pairs, I'll be looking at them on TradingView. There's like 10 different options.
Yeah, it's a lot of different options. So normally with me, I have the type of pairs I normally like to trade. Like I like to trade GBP pairs.
No, I mean like how you was just selecting GU and how there's like a whole list of different like
Oh, okay, yeah, you mean like the actual broker they showing and stuff.
yeah.
Yeah, so
Like
normally
is
my
one of them a
preference.
little faster than others?
Yeah, well, what I noticed, well, normally for me, I normally stick with like Owanda. FXCM, what I noticed with the FXCM chart, you tend to see gaps. Like you'll see like a gap in the price. Like right now, how it's a gap right here. If I go to the Owanda chart, you're not gonna see that gap really. You see that. So it's really just understanding. I don't normally look at Forex.com like that. Forex.com looks similar to Owanda. So I know Owanda is a regulator broker as well as Forex.com. So normally you'll probably see the more legit where prices, you know, it'll probably give you the more accurate look. You know what I mean? But they all still moving the same because like right here you can see where the price is at 2216. Right here is pretty much the same, but the prices sometimes is a pip or two off depending on, you know, or half a pip. It could be depending on the broker. You know what I mean? Depending on their server. So you just got to keep that in mind. But overall, it's going to give you the same look. But me personally, I normally stick with Owanda. I know that's a regulated broker in the state, so it's tend to be like on point with price and everything, and like the look of the market.
Got you.
That makes sense. So yeah, but just for this example, I'm gonna pull up. Let's go to Forex.com. All right, so let me see. All right, so here, let's look at this right here, this scenario. Right here. So we can see, judging based off of past price. I'm here on the weekly chart again, but just so you can get an idea. Price has been moving in this downtrend, lower lows, lower highs, right? Moving in that downtrend. So if we're looking at this scenario right here, this scenario. So we talk about breaker structure. Because a lot of times, depending on where price is at, it's good to wait for some type of breaker structure. So here, all right. So initially, we had a breakdown of structure here, you know, and a slight price pullback. You know, I will still classify this as a retest. Just sometimes you will see price pull a little higher. So it pulled a little higher, it still broke down and closed below here, forming a lower low. So this was considered a lower low because it broke past this previous low. So this would be our lower high. This will be our lower high. All right, this will be our lower high. All right, and this is our lower low. So now price pulled back for another retest opportunity and continued. But with this breaker structure, that's an indication that price is likely to continue down further. All right. So in this scenario, you could have been looking to catch this move, this breakdown play. All right. So initially, you look at like, okay, how do I catch it? You know, you don't want to really get caught jumping the gun, but you can see price came up, rejected, pulled up again, and then fell. So really, this was like a double top right here. This is a double top.
So you had a couple opportunities.
Yeah, right. Yeah, you did have a couple opportunities. So I want to go down to, let's look at it on the 4-hour. Let me see. That's why you don't want to really get caught. Sometimes, you know, if our emotions get into it, we can get caught like chasing price or feeling like we're gonna miss out. And you know, it will be some times when you be like, man, I just knew I should have entered up there. If I would have entered up there, you know, I would have made this or I would have missed out on that. So that's where the discipline comes in and like kind of keep those emotions in check. I mean, because you're gonna feel it at times, you know what I mean? But really just if overall you're just sticking to your plan and just trading based off of what price is showing you, and just be patient and just getting familiar with how the market moves around certain times and based off of the daily moves and things like that. and how prices more than often than not is going to give you another opportunity. So if I'm looking at this right here, this is the move that took place. All right, so price came down. The rejected initially came up to that same level, fell again. And we see we broke down, broke the trend line. This was actually a retest. So really, I would have liked this entry right here. If I missed that initial play, I'm looking at this as an opportunity. Can you see price here? We broke down, broke the trend line. And then this was our retest. Retest of structure. All right, this was Friday or Sunday. This right here was Wednesday. So on that retest, we had a rejection of the trend line. That could have been opportunity for entry there. Stop loss above. Could have just rolled this down on the retest. All right, so that's one scenario that I would have looked at. All right, or you see right here, this, that was a firm break of structure, because then price eventually broke structure here. Now, ideally, I remember seeing this. Ideally, I would have liked to see price retest after that. Like on this retest, I would have looked for entry, but it doesn't always retest exactly how you want it to. If it's a lot of value, you know what I mean? It doesn't pull back to that same level. So it didn't retest that there, and it just kept dropping. And then you can see here, now I'm looking at next levels. This was our previous lower low. All right, so if price breaks below there, that means it's another lower low, and we're likely to go further down, and that's what happened. So price came down, it chopped here a bit, but then we formed a lower low right here. Right, so on this pullback was another opportunity. All right, so really on this pullback, this was a retest right here. Because if I move this down, it basically retested previous structure low. Right here, you see that? So broke, retested, rejected, continue. So on that retest and rejection, go ahead and looking for your entry. Stop loss above, the reject, and you continue to ride this. All right, and then from there, after that, price did continue. So let's say you did enter there after that rejection. You could have caught almost 300 pips before price pulled back. After that, we had price pull back here. This was a bigger pullback, but then you can see that was just a pullback to just continue. All right, big bearish price action right here. And really what it did, it just retested, this level that it retested from in the past. It had a big fall. See. So as you can see, really price action and market structure is everything. It's really important, because we could take this all the way down here. Price broke below here. See that? Retest it. Continue. All right, so right here. Entries. And then after that, man, price dropped big. After that, price dropped over 1,000 pips. Right, so it's all based off of structure. Right here again, before it made that big move, it gave you another opportunity here. Price retested here. See that? Broke structure, retest, rejection,
came right back down,
and a continuation. So at this point, you just trading with the flow of the market, and it continued. Right, and that was when price reached that all-time low, or just past the all-time low that it made in this pair, and then it had the big reversal bounce from that level. So I would say overall, when you're looking at trading in line with structure, just identify the levels on the higher time frames, and then identify your points of structure and just look to just trade in line with that. And that's something I would say, pay attention to how market moved this week. Pay attention to structure and just get familiar. Just continue to have your chart time, because the more chart time you have, the more you start to see these different scenarios play out. The more confident and comfortable you'll get, in trading it.
Got you.
Let me see. Looking at NZD USD, it's all same thing. I could look at this and I could look to the left. I could see, like, okay, this is a major level of demand. Price had a big bounce. All right, so let me see. So if I go to where price came to that level right here, the demand level I just showed was the same thing here, level of support or demand. Became resistance here, broke below here, came back for the retest, continued. So that was your opportunity right there. Once you see price breaks down on the retest, I could look at this on, let's say, the 4-hour or the smaller time frame. Go back to my spot. All right, here. So you can see on this rejection, look for your entries. And you write this down. And where price rolled down to, it rolled down to another level of structure. So the zone I had drawn in was this level of demand right here. All right, after that, it came initially, first it bounced back up to that level, bounced back up to the level, that same level, and the same scenario happened. Found resistance. So we had an initial rejection, pulled back, and held again and broke down. Broke down, pulled back slightly here, and it continued. So this continuation was even a stronger level of a stronger indication right here when price, and this is all structure. So when I'm looking at this, and like what we're doing right now is back testing. So it's like you get familiar with how to trade these. You know what I mean? So if I'm looking at this, initially price found basically a double top, broke down again, found resistance below this level, broke down here. So really on this pullback, this was an opportunity. It was an opportunity here too. Once price broke down and slight pullback, you could have entered there too. Could have entered up here. Stop loss above the high. That was an opportunity. All right, if you missed that one, when price broke down here, breaking structure to the left, on this pullback right here, that was an entry. Could have entered around there, stop loss above this level of structure. And you can see price continue. All right, that's a scenario. Or you can see right here where I just drew this line at. Price broke structure. It broke this level of structure, breaking that low, broke structure, retested, continue. And you see right on this retest, it formed a bearish engulfing. All right, nice bearish breakdown. So that would have gave me even stronger indication, like, yeah, it's going to continue down. And that's what happened there. And then you can see it's set up to just continue to the downside for a little bit longer. Broke down, slight pullback, continuation. Slight pullback, continuation. Do you have any questions?
No, man, I'm good.
Yeah, so that's pretty much the basis of it all. You know, you just focus on structure. Like here, broke below this level of structure, pulled back. On that pullback, look for your entries. Stop loss above, write it down. I actually like teaching this because it really be tripping me out because it's like I'm learning again and it's just seeing these setups. It's like, wow, it's crazy how simple it could be.
Mm-hmm.
Even sometimes I complicate it, you know what I mean? But when I look at it, it's like, it's real simple. It's just really being patient to see, you know, what you like to see and just staying consistent and just trading those type of scenarios, you know what I mean? It continue here, slight pullback, continue deeper pullback this time, but overall still continue to drop. And you can see eventually continue to break structure. Looking to the left, this zone I got drawn up, I'm sure is a level of demand in the past. So here was a break below that, pullback, slight pullback, and they continue.
And it continue down. Mm-hmm.
All right.
Yeah.
So really. Oh yeah, go ahead.
No, so I'd definitely be second guessing myself, man. I'd be like,
Yeah.
it's like say, like you said, like sometimes it looks so simple.
Yeah.
Like it can't be that easy.
Right. Yeah. Sometimes like, man, is it really that, you know, but it really can be once you understand how to read price and you know what to look for. Like it could be that simple, but that's why they say it's psychological, you know, second guessing yourself, you know, not knowing your risk tolerance, maybe going big and then not being confident and pulling out, you know what I mean? And different things like the small things that could really affect you, you know, impact you,
Mm-hmm.
you know, but once you keep it simple and you realize like, yeah, it really could be that simple. You know what I mean? Like it's really, you know, it's really not complex once you understand how to read the charts. You know, then it's just being patient and just allowing the setups that you like to see to come to you.